these returns on equity, they're already blowing past the targets you set on your investor day early last year. And I'm wondering if this means you can set the bar higher in terms of what investors can expect for targets moving forward, or a sense of what a more regular return on equity environment looks like for you.
Well, we've been very clear when we set our targets at Investor Day a year and a half ago that our targets were an ROE better than 13%, but we said that's not what we aspired to, and we thought that we could make changes in the medium term to deliver mid-teens returns. We've highlighted that we think that that's attainable in some of the discussions we've had publicly, and that we give the market more of an update, in the first quarter or in the early part of the second quarter as to how to think about our return trajectory going forward. But we feel good about the progress we're making against that plan, and continue to think there's a lot of upside opportunity for the firm.
On the call with analysts a little bit earlier, you had also mentioned a series of headwinds. When you look at the markets that are ahead of us for the next couple of months, what concerns you most about what you're seeing?
Well, I highlighted in the earnings call that there are a handful of things going on that certainly lead to uncertainty. We are making progress with the vaccine. I did state on the earnings call that I feel like the worst of the virus's impact on the economy is most likely behind us. But we obviously have inflationary pressures, particularly around wages. We have an active debate around infrastructure spending and other fiscal spending in Washington, and potential tax increases. We've got a complex dynamic between the U.S. and China. There's still some uncertainty around the Delta variant. So all of that, leads to, potential headwinds. It doesn't mean that we will see headwinds. I think we're starting to see a more sustained economic recovery. But I think those are a handful of things that have to be watched closely as we move forward.
As far as inflation goes, I know John Waldron had spoken about it earlier this week, but do you think that investors are undercounting how much of an issue this is going to be? And will it force the Fed to hike a little sooner than people expect?
Well, I think there's no question that inflation is a topic that is front and center with every investor that I talk to, and certainly with every CEO that's running a business of any size or any scope. There's real wage inflation across all aspects of the economy right now. And there's certainly, because of supply chain constraints, inflation and other inputs to a whole variety of products and services. And so I think this is something to watch very closely. It's not baked in the cake as to how this will play out and whether or not it will be a significant issue as we go forward. But there is definitely inflation. We haven't seen it in a while. And the question is, what choices do we make from here? How will those choices impact how inflation progresses from here? Those are things that nobody has answers to, but I think have to be watched very carefully.
And you mentioned wage inflation. I know you talked about it on the call a little earlier too, but how long do you think across the industry this upward pressure on wage inflation can persist? And what can your own bankers expect from you?
Well, there's definitely wage inflation in all aspects of the economy. I think everybody that's running a business in some way, shape, or form has to adapt and adjust to that. As I said clearly on the call, we run a pay-for-performance culture, and we're very attuned to what we need to do to keep the best people serving our clients at Goldman Sachs, and I'm sure that we'll execute on that appropriately.
David, I've been mentioning it all morning. With $3 billion in equity trading revenue, that brings you past every single one of your peers. Do you think that you can persist that? Do you think that you will continue to be the number one equity shop on Wall Street?
We have a leading equities franchise, and we're continuing to invest in digital platforms and other capabilities that can help us better serve our clients. I'm not going to speculate on a quarter-to-quarter basis about exactly where we'll be positioned, but I'm very confident that we have one of the leading equity franchises that's appreciated by our clients, and we'll continue to serve them well as we move forward.
And when you look for your hiring opportunities moving forward, which areas of the business do you think that you can continue to grow, or are there cuts that you are willing to make at this point through the end of the year?
We've highlighted very clearly in our plan, as I know you know, Sonali, that there are a handful of areas that we're investing in where we see there's an opportunity to really grow the firm and add more durable and recurring fee-based revenues to the firm's business mix. Those have most prominently been the build-out of our transaction banking platform asset management broadly, with a particular focus on our alternatives platform. It's been wealth management broadly and also our digital consumer bank. And so we continue to invest in those businesses. Broadly speaking, with respect to talent, we're always looking for extraordinary talent across the business. We've made, hires in investment banking, in markets, in asset management, in consumer, in other parts of the firm, such as risk and compliance and legal over the course of the year. And we continue to look for great talent. There's always room for great talent at Goldman Sachs, and we'll continue to find people that we think can strengthen our franchise. We've made some phenomenal hires in the engineering space and continue to attract many world-class engineers to our platform, given some of what we're working on. So talent acquisition will always be a focus for us, and something's just core to what we do.
So return to office. Are you finding that more and more people are coming back now that the year is progressing? You had mentioned that remote work to you was an aberration, and do you still feel that way?
Well, we're definitely, I've actually said that I've never said that remote work was an aberration. I was asked a question about traders, 98% of our traders working from home. And I said having 98% of our traders working from home was an aberration. I do think generally, and I've been very clear on this, for Goldman Sachs to effectively serve our clients and also to hire and retrain and attract all the young people that want to come work at the firm, we generally bring people together. We have a very collaborative apprenticeship culture. And I've been encouraged by the fact that more and more people across our offices around the world have been returning to office. We have always been extremely flexible with our high-performing employees and given them lots of flexibility to manage their life and travel and work remotely, which is a core part of our business. That continues, but fundamentally, we bring people together to collaborate, to innovate, and in particular, to mentor and offer apprenticeship to our young employees. And I think we're on a positive journey there that's right for Goldman Sachs. And so we're going to continue to execute on that.
David, you've mentioned the expansion of your operating leverage here. You're making much more money than you are spending. Do you think that this is going to give you more room to do even bigger acquisitions ahead?
We laid out a plan at our Investor Day, Sonali, to continue to bolster our core businesses, to grow in 4 key areas and run the firm more efficiently. And we're executing on that. It sounds like you listened to the earnings call, and I said on the earnings call earlier, in particular with asset management, wealth management, consumer, our digital consumer banking platform, if there are inorganic opportunities to accelerate our growth and our objectives and our strategic positioning in those businesses, we'll certainly consider them.
But should they be considered more tuck-on, or can we see something more transformative in the next year or so?
We're always looking at things that we can do that can expand our competitive position in those areas. If we find something that's attractive that can accelerate our position, we will consider it, but it has to offer accretive returns and be additive to the franchise. And
for our audience also, can you explain your chance to expand abroad, David? I know that you've been expanding and hiring in different areas outside of the United States. What are you most looking forward to?
Well, we run a global firm, Sonali, and so at the moment, about 45% of our business is around the world outside of the United States. I highlighted on the call that I was excited about the fact that NN is giving us more strength in our asset management business in Europe. I mentioned the fact that we're excited about our wealth management joint venture with ICBC in China. But we operate a global firm. We operate in 45 countries around the world. We have a significant portion of our revenues outside the United States. When we continue to think about operating as a global firm, we think it positions us best to serve our clients.